Now I see you guys from Pakistan. Hello. I hope you hear me well. Let's check the sound, and we are waiting for several minutes. We are waiting for several minutes for the people to come. Yes, we will talk about BTC as well. Yes, it's absolutely okay to long BTC now. But it will be even more okay when it makes several touches to the level. I will show you to this level, or the first zone for purchasing is here. But we will discuss it in detail a little bit later, okay? Watch till the end and we will talk about this. While we are waiting for other people to come, let's check the market. The market is moving good, but on most cases, on most coins, there is a correction. My entry is 7,450. You're a lucky guy, man. You're a really lucky guy. That's really good entry point. Let me check the screener. LPT, we have no aims on higher time frames. Here we have the only aim on 4 hours time frame. LPT, everything is correcting. It's going down. Here I see good zone, one good zone, second good zone, but the sailing volumes are too intensive. I know that most of you guys know that I'm trading zones, smart zone as well, and most of you know what I'm talking about when I talk about very intensive sailing volumes. Oh, sorry. When we have really good aims, yes, we have really good maximums, but what I don't really like, I don't like, let's watch 4 hours time frame. The volumes differs with the screener. Let's watch again. Here we have really good extremums. On 4 hour time frame we have the uptrend movement. Let's switch to lower time frames to watch the zone from where we can buy. There was the first zone, but there was broken. I see no zone yet. Maybe on 5 minutes time frame. No good zones. So let's watch something else. What else do we have? We usually watch only the instruments with a nether of more than 2% during the 5 minutes time frame. Okay, I think we can start. Great. So, okay, guys, let me start with a short introduction. Welcome everyone to CASHBACK TV, and today we will talk about 4 global topics. First of all, how to select active coins to trade, then why we shouldn't trade inactive ones. It's extremely important topic to discuss. Then we will discuss the universal risk approach that will probably solve one and ever all your questions and pains about calculating the leverage, watching the risks, calculating the risks in different scenarios and different strategies and so on. And we will try to trade if something if something is available on the market, because now I see no situations. So let's start with active coins. Why it's important? Why we should trade active coins? Please answer these questions. I really interested. What do you think? Why scalpers? Why it's important for scalpers to trade only active in-play instruments of high volatility? Why shouldn't we trade very, for example, inactive ones that moving very slow and so on? Why shouldn't we do that? One who will give a right answer will get 5+ high volatility and liquidity. Yes, in fact, the answer is the liquidity. That's a good point. Why do we need liquidity? As a scalpers, someone who ever traded Forex or stock market never paid too much attention to volatility, because on such markets as Forex or stock market, it's not so important, as most traders are positional traders. They trade positional trading, keeping a trade open during more than 1 hour or even several days and so on. But we deal with scalping because of extra profit we potentially could grab using high volatility and order book market inefficiencies. So one of the most important metrics for good scalping is volatility, as you know, but it should be high and moderate. So let's talk about the extents of volatility. The volatility could be very low, medium, high, and extra high. So let's start with the medium volatility. When you see the instrument is active, the ticks are moving quite fast, like here we have quite active, really moderate volatility. You really need something to compare with, just to make some conclusions about the type of volatility, about the extent of volatility. So let's start, for example, with medium volatility, when the nether more than 1.5 or 2%. I will show you what is the nether for those who don't know. The nether is placed here, for example, on a screener C-scalp. 2.42% of nether means that it's a core measure of volatility. It shows the price change in percent, in percentage during a time frame. For example, EDUSDT change about price changing is about 2.5% inside 5 minutes candle. If we take, for example, 5 minutes candle, we will measure it, and the average price change will be about 2.12 now. As you see, that's true. That's how we measure the volatility. So medium volatility is really good for zones trading. You know that I really keen on zones trading, and now I will maybe show you some examples. Most of all, I think know about the zones. Just a moment. Yes, I think I showed already this trade. You see, the zone itself, the volatility is moderate. It's not very high, it's not very low, so it's just moderate. We see the active, absolutely normal volatility, and there was the instant reaction from this zone. There was, I would like to pay your attention that the risk-reward ratio, the stop loss, was about 1 to 2. There was really good risk-reward ratio. There was a take profit, or I don't remember, maybe I closed this trade manually. Just a moment. Yes, I closed this trade manually, something about $100. But anyway, you see the moderate, really good volatility. So now let's switch to high volatility, more than 6% of nether. When we see more than 6% nether here, it's quite often when the market is on a new stage of bull run. More than 6% of volatility, and it's good for breakouts when we see that the price is still under the level, but with many touches to it, we are expecting the good impulse. So I need to show you the example as well. For many of you watching our signals in the group, you already know that many signals are something like this. It's a classic of scalping. When you have an impulse, here we have to pay attention to quite high volatility. We need the price to be really hysteric and very volatile before the breakout. It means that the participants are really active. They really want to bring this impulse, to bring this breakout. And of course, some examples. As you see, the really high volatility, as you see, much higher than I just showed you before. Just to compare, you see, the volatility is much higher. We need this volatility to trade breakouts. Maybe something else. In this case, we have not very good volatility, as you see. That's why the impulse was quite bad. But yes, it allowed me to cover my minus that I started the first trade with. But you see, the volatility is very low, and it hardly gave me an opportunity just to trade in a small plus, just to cover the loss, the previous loss. There was a bad example of breakout. If we can, for example, compare it with this, for example, and we have really good, as you see, movement of ticks. So you see there's such an active breakout that there was a lag on my order book, but here you see that I was closed by limit orders. So that was about high volatility, but now let's talk about extra high volatility. The last kind of extent of volatility. So usually it's a mess in the order book, and I don't recommend to participate in such volatility. Usually unfortunately I have no really clear example. All of these instruments are about something between moderate and high volatility, closer to moderate. But extra high volatility is when it's about madness in the crazy movements, roller coaster, something like this. You can call it as you wish. The movement is unpredictable, and usually it's in most cases it's the result of some news release. For example, FOMC rates release. It's a kind of casino to trade such a market. So using screener always will help you to just to measure volatility. Low volatility is below 1 and 5%. This is about low volatility. Moderate volatility is about moderate and high. Moderate start from 1.5 to 2%, and starting from 2% to 4 or 5%. If we're judging on 5 minutes time frame, it's about high volatility. And when we have 11-20% on 5 minute time frame volatility, it's about extra high volatility, and usually it's the result of news release. So finally, what we should do, we should trade something. Let me show you. Let's imagine we have a kind of scale. We have, no, let's draw it in this way. We have very low volatility, medium volatility, high volatility, and extra high volatility. Extra high volatility, less than 0.5, 1.5. Medium volatility is about 1 and 7 to 2 and 2. Then from 2.5 to 5 or 6. And extra high about 7 and more. So what we should trade? We should trade only the middle of the scale, I mean high volatility and moderate volatility. Why? Because just to be able to control your trade, to avoid squeeze of the price, to avoid manipulation, and that's why both sides are risky. Extra high and extra low volatility is risky. If everything is clear about extra high volatility, is about casino, why low volatility is so dangerous? So if we draw down this scale, it's I think everything is clear. So finally, why we shouldn't trade inactive instruments with very low volume and nether? The answer is simple. Maybe some of you will answer. I really curious about this. I really want to know, what do you think about low volatility? Because we are looking for short-term trades, and if the coin is inactive, there won't be any movement. So yes, absolutely, Eric, you're right. Yes. If we get into slow coin, we can't get in and get out fast. It's more actual and relevant problem for huge players, but anyway, for small players, for retails, there are some other kind of problems as well. And let me check. No people, no money. Yes, absolutely. In and quick out. Not with my... Yes, absolutely. Price can be... Yes, absolutely. Armando, you are absolutely right. This is the point. The price could be easily manipulated when we have very low volume. So there are several problems, and the main problems of inactive instruments are spoofers, squeezes, and robots. So finally, if we, I don't have, probably I don't have the example of spoofer just to show you, but on inactive instruments, the huge guy really able to manipulate the price as he wants. For example, he could place several limit orders on the sides of a small or quite high range just to load inside this range. He also can organize different squeezes just to count your stop losses. Maybe it will be reasonable to draw it down. Yes. Let's imagine we have very low daily volume, about 12 millions, for example, instead of 1 billion. The price is moving very slow, and this is a good opportunity for huge player with not too huge player of medium size, let's say. He doesn't need too much capital to manipulate this market because, as you said, few people, yeah, very low, very low exchange of capital inside this coin. So we can spoof using, for example, $30,000 of dollars using leverages, placing different limit orders above and below this range. We can also organize such a kind of liquidity grabs, and all this kind of stuff will absolutely spoil your trading. If you try to load position or try to trade inside this range, probably it will lead to some losses. And of course, it takes much longer time for your trades. It becomes forex trading. That's, I think, a bad manner now among the really professional traders. So let's switch to the next topic. Maybe let's watch something to trade. Maybe we will have... Just a moment. Anton, Alexander. There are several Russian-speaking guys who are who level up their English. That's really good. Okay, if no questions, let me check the market. Maybe something to trade STG USDT. The market is really active, but unfortunately we have all the targets just broken. I mean, under broken targets, I mean that all the levels infringed or broken. Nothing to grab, nothing to break. We need something like this, some really clear and stable extremums to where we can participate in breakout, or to load in advance from smart zone, or maybe some limit orders, huge sizes to take a rebound from. But what I don't like on the markets, on active markets, every time on such a kind of market, on the modern market, let's say, there is often picture when we have something like this. We have a kind of consolidation of on 15 minutes, the growth of volume, then we have really good movement. We trade along these movements. We are making different kinds of trades along the movement, inside this movement, but then we have such a kind of decrease of volumes. It means that most people who trade this, who tried to load position during this range, both kind of traders, retailers and huge players, they fixed all their profits here, and their fixation means that price is getting lower and lower because they sold their positions here. And this kind of correction is not so organic. I mean that this correction is not made on active sales. This kind of correction is not an active sales. It's just a fixation of position. It means that people just fix their position and go away. They exit market. On this kind of correction, we see the convergence with the volume. It means that the volume going down, despite the fact that there are huge sales. Anyway, both sales and purchases are getting lower, lower, lower and lower. It means that capital is going out from this instrument because there is nothing to do anymore here, because we broken every, for example, highs here. We fixed the profit. There is nothing to do here until the next active session. US session, Asian session, someone who are getting back to the market and keep pushing the price again to the next level to assault new highs. That's how it works. That's why I don't like such a kind of correction as you see. That's what I just draw down for you. Absolutely the same on every instrument. Okay, let's talk about the risks and leverages. Maybe we will publish a new video about this topic. Let me check for your questions. Don't hesitate to ask your questions, or maybe you have some ideas to watch the instruments. We, especially with our students, we often discuss investments ideas based on zones trading. Yesterday we selected People USDT to place limit orders on Bybit, just to purchase this instrument for spot from this level, from this kind of zone. We are trading the zones as in not only on futures but on spot trading. So it's already giving about 60%. That's really good. I fixed most of my position, but as you see, I just want to show you how effective it works. If we see really good aims on 1 hour time frame, or better on higher time frames, just for example 4 hours, you see here cascades level and the instrument is really active. We see that this consolidation is gonna be broken. What we should do, we should wait, we should find the closest aims, the closest buyer's zone, really strong buyer's zone to place your spot limit orders. What I really want you to pay your attention. Look at this zone. This zone includes really, really huge volumes. We confirmed these volumes, and look at the outburst of volumes when the price exit this zone. The really good impulse. And when we break the structure, when we have a kind of fixation of huge player here, we have the decrease of volumes, but we have no extra high sailing volumes that will overlap this volume, this purchases volume. No sales should overlap these volumes. That's why this kind of entry point was really, really good for the workout. And I think you see the really great potential. There was about 16%, if I'm not mistaken. Sorry, 7% of the zone. And here we have the workout of about 52%, more than 7x to our risk. And that's even not a final target. I already left about 30% of the position, but it's still too early to fix because we have this level as a target. Maybe there will be the pullback from this level because there was only one touch. This touch will be much earlier and the level is higher, but anyway, we're still waiting for this target to be touched. If you have some ideas on other instruments, we can really discuss. I will be glad to discuss. About the BTC, let's talk about the BTC. Here we have another one zone, if I'm not mistaken, and we are lucky, guys. As you see, absolutely almost the same situation with USDT. Really good volumes. We are coming to the zone. We have really good aims. Let me check. What I don't like is that we already had the first approach and the workout was from these candles, from these shadows. So how I would probably enter this position, I would wait for the price to come deeper into the zone, and I will open the trade on the exit from this zone, on this level. By this aspect, I will be sure that there is a power of buying out because I really confused by the first approach. By the rules, we shouldn't trade the zone where there was already the first approach. So let's watch this trade. Let me place the alarm level. And what do we have here? We have really good aims. We have really good aims, at least this one. Let's switch to another time frame. Yes. Not bad, not bad. The volumes are coming. The volumes are entering this zone. So we are waiting. Okay, now let's talk about the kind of risk management I would like to talk about with you. I just want you to show this, to show you this table. What's it about? I would like you to forget about such term as leverage, because you don't need to use it anymore, because all these leverages will be calculated instead of you automatically. Let me just show you the example. For example, we have this zone. We measure it. We measure the zone. It's about 2% plus our stop loss. We, for example, place here our limit order, but we need to calculate this limit order according to the risks. Here we have our stop loss plus 0.2%. So it's about 2% plus 0.2, 2 and 2. Remember this figure. So what do we need? We need to set the daily limit for loss and the limits for trade. For example, let's start with the classic example of your deposit, $100. $100. You have a daily drawdown about $10. If you lose $10, you just stop trading. That's a golden rule of trading. When you start to follow it, you will be a trader. If you can't follow it, you will never be a trader. And then we divide it to several trades. We just set a loss per trade. For example, $2 and $5 per trade. You have 4 trades per day. That's absolutely simple. We have 10% daily drawdown, namely $10, and 25% loss per trade, $2.5. So we enter it here. This will be our constante, absolutely static, almost the same, always the same figure of our loss. Our zone will be 2 and 2, the figure that I asked you to remember. So our position will be 113. It's about the first leverage according to this size of the zone, with our constante of $2.5 loss. So it will be absolutely easy and effective to calculate it every time you trade. Even it's applicable even for breakouts. For example, you have a breakout strategy, you have a level, the price is compressing, you calculating, for example, 0.5 stop loss. You calculate such a stop loss that it will be safe enough not to face such a problem when you're getting stopped and the price going without you. So, for example, it will be 0.5. Of course, it depends on the path of each instrument. So let's imagine 0.5. You just write down 0.5, and here you will have 8 leverage, $800. If you will be stopped, nothing. Oh, sorry. We should write it down here. Your leverage will be the fifth leverage. So 0.5 your stop loss. In dollars, it will be again 2.5. Nothing, no surprise. and your position will be $500. Everything is stable. What is the most important advantage of this system is that in this system you always have the same stop loss, the same loss per every trade, because based on my personal opinion, my personal experience, the most popular source for tilt is just surprisingly higher than you expected loss. For example, you clicking by the market trying to participate in a breakout, it fails, and you always have the loss higher than you expected. That's then the core way to get a tilt, emotional trading. Using this kind of risk management, you always have the same stop loss. You are already, you always ready for this, and you emotionally always stable. That's it. Please give me some feedback on the material you just got. And we are getting into trading, trying to trade something. We have STG, or maybe you have some questions or some ideas to analyze some coins, maybe some investment ideas. Look at this, the sailing volumes are prevailing. It means that that what I was talking about, that we just closed all the positions here, and now this is the inertia of fixations. No aims, absolutely no aims. Alexander, you are not looking at spot orders. In fact, I usually keep an eye on spot orders, but when it comes to searching, just searching the setups themselves, I usually rely on futures graphs and futures order books. And if I find something worth it, something really good, I open a spot as well and watch the spot. But the futures graph and futures order book is primarily. I just use only futures here just to save my working space. In most cases, I use spot for trading pullbacks from huge sizes, because sometimes I trade futures pullback when there is no really big size on futures, but it's placed on the order book of spot. Sometimes it really works good. Look at these, the volumes are slowing down, making these zones not so reliable as I expected. Maybe do you have some questions on the risk management? How do you calculate your leverages? Because some people use, for example, 5 or 7th leverages when they trade pullbacks, and 4 5 leverages, X leverages when they trade breakouts. I usually always come to this table. I get used to use it, and it really helps to fight tilt. It really technically helps it. This is the truly effective instrument, despite of some esoteric kinds of ways to fight tilt, like making yoga, try to make some breaks. It's almost impossible when you already have a tilt. It's impossible to stop for many traders. I think I'm sure you know what I'm talking about. And yes, I promised you to dismantle the behavior of the BTC. So we can, of course, only judge, only analyze with different extent of success. So people almost reached the target. People almost reached the target. I think I would probably close the trade from Bybit. Why? Because I really afraid that the BTC is gonna get a correction. Great. And what's about the BTC? Anyway, even if we have something like this, I wouldn't face a FOMO because my entry point was somewhere here. That was enough. That was a really good profit. So what I'm talking about, BTC. Previous time I was dismantling the BTC and I gave you two scenarios, and the first scenario was working out. The first zone from where I placed a spot, this is the halving. You see the mark when the halving occurred, and I really wonder that the recovery after halving was really fast. Usually it takes about 100 days after the halving to let BTC growth. But anyway, I believe that halving is already overestimated event. But anyway, you see that there are enough reasons for BTC to form this pattern for growth. Because here we see, if we judge this area as a consolidation, here we see the liquidity grab from where huge players just continue to load their position. And the first scenario prescribed that we get there to this zone. The next zone that would probably be the last stage for BTC. There was the last barricade to resist from a bearish scenario. There was this zone. But anyway, fortunately, we didn't come here. We reversed earlier, just coming to the first zone. And now we broken this inclined level, a small consolidation. Then we formed again the zone. And here I believe there are two scenarios. I really believe, I really hope that I will be able to load BTC here again. here will be really good buying out power. No other chances. If, for example, of course, we can just extrapolate, we can just make our analysis, and it could be spoiled by fundamental factors like SEC court issues or something like this, some economical turbulences. And I hope everything will be clear when we comes here. And if everything is okay, if economic background is okay, if FOMC stops talking about that they don't know when inflation will be lowering, and I hope in this case there will be really good outcome. We got to this strong buyer zone, and we got to assault 80,000. There will be really good opportunity to earn for everyone, for retails, for both retails and huge players. They will be in one boat, both here. But there is as well a scenario that we go right from current position. That's what I can say you about the BTC. Where can we get the risk management calculator? You can write me, you can direct message me. I think I have, or you can, yes, you can write to Telegram. Somewhere we will adhere this file, or you can direct message to me directly. I will give you this file absolutely for free. Okay, we will be finishing our stream. I think that was of great use. Please give me some feedback, or maybe you have some ideas for the next videos or streams. So thank you all for activity. You are the best audience. So, okay, we are finishing, and see you soon on the next stream.